Hey traders, this is Christian from Tribeca Trade Group, and today is Friday, August 9th, and this is your recap for the day and recap for the week. As I've got this week's performance up here, and might as well go to the indices first just to see where we finished. This is just a clip from last week's newsletter, but just zooming in here a little bit. This was the performance last week, which was pretty atrocious. This week, which has been another one of these long weeks, right? Considering the swings every day, the volatility, which has been, kind of all over the place this week. We kind of, got the brunt of it in the beginning of the week, and then we got a bounce midweek, and then a little bit of a digestion and move back today. So for the week, the performance was SPY just finished fractionally down for the week. Again, a pretty good comeback from where we were on Monday. The diamonds were a little bit worse than that. Same thing with IWM. Qs were kind of right in the middle of that. IWM and EFA, EEM and EFA emerging markets and international developed markets were both down again for the week. TLT and gold, another strong week after, these have been very hot the last couple weeks. And it seems like right now, they've been really good places to buy the dip. When it seems like these are down, we are seeing some buying come into it. And it's been a pretty good indication when something is up in the market. I think TLT started the day down and came back and was up pretty decently and then sold off again. So it's just we are seeing this bigger moves than normal. So let's, in terms of sectors, before I go over to the and talk about the technicals for the week, what performed best, right top of the group again, gold miners up 4.7%. Interesting, defense and aerospace up 2.4%, and then you kind of have a mix. You had the utilities in there, REITs, solar names did pretty well, outperformed for the week. Home builders had some outperformance in the beginning of the week as well, or not in the beginning, maybe in the middle of the week. Energy continues to get smacked. Oil services were down 8%. I've been saying now for a while that when you do get a kind of bounce or rally here, it's been a really good place to go ahead and short. Steel names down 5% as the trade rhetoric continues to kind of come to a head. Oil and gas also down 4%, the equally weighted ETF. China internets were down 3%. And the FANG stocks were actually down 2.7%. So they were down a lot more than the overall market, which I find that kind of interesting, or was down worse than the Qs. But if you look at some names that were in the Qs, there was some really good outperformance there too, in names like Visa and McDonald's. I think that's in there as well. So where does this kind of leave us, right? And by the way, international performers, not a lot going on here. Egypt, Argentina outperformed, but you could see a lot more groups that were down over 2%. There's more on the list there, but I kind of cut these off at I think 12, 13 names that I've got on the list. But you could see certainly a lot more names were down. We're down more than a few of the bright spots on the positive side. So looking at where we are in the S&P. It is kind of crazy, right? Considering yesterday's price action that we closed on the absolute highs, it looked like maybe there was a combination of a squeeze going on as well as some money being put to work, right? I mean, that's sometimes what happens. You do get, when the sentiment switches all to kind of one side a bit, what could happen is the shorts will actually have to come in, and once they see the market coming up, they've got to cover some of their shorts. They're forced to cover, and then as well, people are looking for things on, to buy on to buy the dip, right? So we ran into resistance. I talked about this a couple times. I mean, I'm not going to rehash this whole thing, but I talked about this yesterday pretty extensively. We analyzed the S&P chart, so there's not much to really add here. I think this was good analysis. I said that we had resistance of a 29.50, which again, if you're trying to squeeze and get to that last little bit, a lot of times it's a kind of a recipe for disaster. Not a recipe for disaster, but it's just not worth it. And then same thing, like we were looking at about 2 weeks ago, the city panic euphoria sentiment indicator, and it got very close to euphoria. So, sometimes these things they don't have to get right to that point to see a little bit of a sell off or digestion. Sometimes you just get darn near close to it. So, really, I think if you, besides what's going on with tweets and trade rhetoric and so forth, if you're relying on the technicals, they're giving you some good places to say, hey, this is not the right place to add risk versus some better places to do it. And looking ahead to next week, and it's the same thing. Like some of the names that I have either been trafficking in this week or have been on the radar. They all kind of just seem to run into resistance. Now this can be overcome. There are a couple names, like if you look at Visa managed to get right into the value area and did pretty well. Outperformed. I think at one point it was actually up today. Just kind of got into positive territory. But that's what your outperformers and that's what your strong companies will do. So I think you just want to bear that in mind. Where did McDonald's finish? Man, McDonald's finished up another 1.4%. Probably a little bit overbought at this point, but so I think we're going to continue to kind of have these, certain names are going to outperform. I think a lot of names that reported a strong quarter continue to rally, and names that are just have been hot will do that, right? So Roku, for example, increase some price target increases today, got the stock going a little bit. I did like a quick 5 minute day trade in this one today, but it was a small position and I didn't hang on for as high as this thing went today. But that was one of the names that we mentioned at pre-market. And then if you just go down the list of some names, I mean, look at Shop. It's funny because you'll look at some of these names and you'd probably say, hey, the market's doing, extremely well. Shopify up another 3.4%, closes really high to the, really close to the highs of the day. Names that we went over yesterday, in the end of day video for yesterday, this team, which I got out of today, I kind of added to the weakness and then got out at this VPOC, which I think was the right thing to do. But I think you're going to have these opportunities to get into either strong names or get into the indices, but you have to be kind of patient. And I think if you look at how today went and this week went, I think this is. And who knows? I don't have a crystal ball, right? But I'm probably going to be trying to trade it, given that when we get a little bit stretched to the upside and start to hit overhead resistance, I think you have to be super disciplined and take some profits, especially if you're trafficking in options, right? So things that get super strong, you want to take off. Is it kind of a fade the market right now? I'm not sure, but I think, and then as well, when things are down a little bit to the, hit a little bit too hard like they were this morning, then I think you can kind of come in and try to scalp a little bit. But I did that with a couple things today. Like, I always try to tell you what I do and not, um, you know, make stuff up or say, hey, that was really cool. But I played a little bit of IWM from the lows today, and I took it off right into strength. And notice this came all the way back, and I was able to take the rest off here, and that was it. And I think you kind of have to be setting up for more singles and doubles. And if you happen to get that home run every so often, something like how AMD was this week, congratulations. But I think those are going to be few and far between from now on, or at least until we are in a seasonal weak period of the year. So make sure that you're adjusting your trading style to a weaker time period of the year, and to this trade rhetoric, right? Because as much as like names like Shop and Roku and McDonald's that are doing very well, and maybe CMG, which I think did pretty well, kind of sold off there a little bit at the end of the day. For every one of these right now, and this one is a couple of these are a little bit non-trade sensitive and more higher quality, like a Visa or McDonald's. You're also going to have this kind of stuff too. U.S. Steel hitting 52-week, back to 52-week lows. Caterpillar down here as well. So it's really like the tale of two different markets right now, and then there's a whole bunch of sectors and groups that are caught in between. So what we're going to be focusing on in the weekend newsletter is just sectors that you really want to avoid or even sell premium against. Regional banks. Every time these things try to break out, you can see I've got a trend line drawn here. They fail, right? So there's going to be groups where I think there'll be good opportunities to fade and collect premium on rallies. And then there's going to be still momentum and areas that are less trade sensitive that are doing quite fine. So really, that's what we're going to be focusing on. I always kind of set this up so that what I'm going to be looking at for this weekend. That's basically what I do. Usually on Sunday, I honestly try to take the day off on Saturday. We actually have some company this weekend on Saturday, but I like to get one day where my mind is just kind of free of the free of the market, and it's really good. Like if you take it, it's important to take a little bit of screen time off, not just because not just to say, hey, well, I'm going to take a break. It's just it really gives you perspective to take one day off away from the screens, and then coming back and being a little bit objective. The other thing that I tried to do, really, when I added risk earlier in this week, is take off a lot of positions, right? That I just don't want to. I think again having lesser positions, like I normally carry around 15 positions, options and stock. Usually it's been, I think, a little bit more stock than options. But right now, I think I even want to bring that down to about 5 positions, and that includes stock, right? And that includes names that don't have any optionality to them, which kind of brings up the next quick topic. Is that yeah? I mean, I think normally what I think is better opportunity is what the moves that happen after the market closes, right? We know that over time that the majority of the market moves happen in the overnight session versus when the market is actually open from 9:30 to 4 o'clock, right? That's a proven fact over the last 10 years. So that's why I'm more of a swing trader than a day trader. But from time to time, that changes in the short run. And I think given this week and the price swings, now is the time to be a little bit more flexible, and be trying to take advantage, because this is while the VIX is a 17 18, that's that is showing us that we've got bigger moves that are happening while the market is open versus the overnight move. So we'll see. If the VIX happens to slip back below, if the VIX happens to slip back below, let's say 15, I think it made some progress, falling below 20. But I think if it gets back to 20, right, then you have to kind of think about more day trading opportunities and more with the indices as well, because we know that correlations pick up. Single stock correlations really pick up once the VIX gets over 20. So again, it's going to be kind of a wait and see how this goes. But all in all, even though the VIX at one point was up, I think 11% today, it only finished up 6%. So again, I think we're going to have some decent exploring the ranges in the next couple days, couple weeks. The one thing that's positive is we're kind of getting out of earnings season, which some buyback plans should be turned on a little bit more. So you might have that coming back into play a little bit, which should help the market. Also, I think I forgot to mention this yesterday, but credit spreads, right? They're coming off those highs that we got earlier in the week too. So again, it's a process, especially I think some names, it's going to take a little bit of a time before they kind of carve out a base, right? Just one or two other stocks, and then that'll be it. But I do see a lot of inside days, for example, right? Amazon had a couple good days, but again, you just have to be careful about chasing, right? Even though yesterday had a great day for Amazon, closed on the highs, just like the indices, it was not a day to really, be on that side. it was a day you could actually be selling a little bit of premium. Notice what this did with the value areas right at the 5 minute bar, failed at 9:35, 9:40 in the morning, and then ended up down $25. So again, we'll talk more about that in the weekend video. If you're not a member of Tribeca Trade Group, you can email me with any questions, but would love to see you try it out and give me some feedback and opinions on what we put out for the weekend, which I think really helps gets everybody ready for the week ahead. All right, guys, that's it. Have a great weekend. See you on Monday.